Hello and welcome to my tax sale investing training video. Today's topic, we're going to be talking about tax sale investment brackets. So before we get into the brackets, let's quickly go over what a tax lien is. A tax lien by definition is a claim against an asset. In this case, we're talking about real property, filed by a government taxing authority against a delinquent taxpayer. Now, in the United States, there's typically three types of tax sales. There's tax lien auctions, there's tax deed auctions, and there's also what we call redemption deed auctions. So the first thing you're going to think about when getting started with tax lien or deed investing is if you're looking for yield or if you're looking to generate property ownership. For those investors that are looking for yield, you'd like to generate the highest interest rates possible. You're really looking for a guaranteed investment that has security. Many times you're looking to build your retirement, and with investing for yield, it takes less time in researching, and it's really less of a burden. Now, as far as investing for ownership, you're looking to replace your income, generate lump sums of cash. Now, there obviously is going to be more time involved because you're acquiring property. It's also going to be usually a little bit more expensive because you're actually buying the property. So let's get into the investment bracket systems. Now, the investment bracket system can be used as an example or guide for bracketing property investments. The bid amount is a reflection of the property's value. So this bracket system helps categorize and evaluate potential investments. So the first thing we're going to do is we're going to bracket tax lien certificates. Now, the first thing we're going to be looking at is the minimum bid versus the assessed value. Aside from providing the amount of the investment, the minimum bid or the lien amount is also going to be a reflection of the property's value. Now, the tax lien amount is equal to a single year of delinquent taxes and any penalties. Also, the amount of the tax lien is almost always relative to the property's value. So the higher the tax lien amount, the more valuable the property. Now, the key to profitable certificate investing is to purchase tax liens that have the highest assessed value for the lowest minimum bid amount. Now, here's some investment bracketing tips. When reviewing a list of available tax lien certificates, you're going to find that the opening bid amount will vary. Now, the opening bid amount is usually going to be a reflection of the property's value. So as I said before, the higher the opening bid amount, the more the value the county has assessed the property. Also, the tax lien bid amount will usually represent about 1 to 2% of the property's assessed value. Now, what the investment bracket system can do is it can be used to determine the minimum or maximum cash you would like to invest per tax lien. Also, the investment bracket can help you determine your objectives and goals. So depending on your investor profile and the capital that you have available, you can set an investment bracket to get started with. Once your investment bracket has been set, you can start focusing on properties within that price or bracket range. So there's 6 different tax lien certificate bracket systems, and we're going to go through each one of them. First is investment bracket number 1. Now, these are tax lien certificates that range anywhere between $10 to about $500. Usually the property on these properties will be valued anywhere between $1,000 to about $30,000. In this property price range, you can find residential building lots, smaller commercial lots, mobile home lots, vacation or mountain land. You can also find timeshares and also some types of vacant land. So with investment bracket number 2, these are going to be tax liens that range anywhere between $500 to $1,000. Now, the assessed value on these properties can range from anywhere about $30,000 to up to about $60,000. This is where you're going to find some of your higher value residential lots, your commercial lots. You'll start getting into the lower price single family homes and condos. You'll find mobile homes with land and larger tracts of land. Now, with investment bracket number 3, these are going to be tax liens that range anywhere between $1,000 to about $2,500. The assessed value on these tax lien certificates usually range about $60,000 to $125,000. With these, you're going to start finding nicer single-family homes, nicer condos, commercial buildings, commercial building lots. You'll start getting into multifamily residentials in some markets, and then of course larger tracts of land, some type of valuable land. Now with investment bracket number 4, these are tax lien certificates that range about $2,500 to up to about $5,000. The assessed value ranges on these tax liens from about 125 up to about 250. These are the tax liens. These tax liens. You're going to find properties like single-family homes, custom homes, commercial condos, high-value residential land, commercial building lots, vacation homes, large tracts of land. With investment bracket number 5, these are going to have tax liens that have a bid range of anywhere between about 5 to 10 grand. With these tax liens, you're going to find assessed values ranging anywhere between 250 to up to about 400,000. With these tax liens, you're going to get your custom single-family homes, your commercial property, your commercial building lots, your commercial land, and then also larger tracts of land like 80 plus acres. And then you'll also start getting into your apartment buildings, your duplexes, your sixplexes, those type of properties in about this price range. For investment bracket 6, these are going to be tax liens that have a value of over $10,000. They can range anywhere between $300,000 up to millions of dollars. These are where you're going to find your custom homes, your large commercial buildings, your ranches, your farms, your large tracts of acreage, and then also, of course, your apartment buildings. Now, as far as these brackets, this is more of a general rule. Some tax lien certificates may range in value. Of course, a single-family home in one area in Florida may be worth, the average single-family home may be worth, $60,000, but somewhere else within the same state, in a different area of the state, it may be, the medium home may be $200,000 or $150,000. So it really is just going to depend on the market, but this at least gives you a tool to think about as you start investing. Now, as far as choosing your investment bracket, after reviewing the investment brackets on the previous slide, you're going to want to choose an investment bracket that works best for you based on your resources and your objectives. Well, how to use the investment bracket system? Well, once you've chosen a bracket, you can start reviewing tax liens that fit within that price range. Regardless of the capital available, it's important to start with something. Some investors choose to purchase more tax liens with their capital, but in a lower price bracket, while other investors decide to invest in higher tax lien brackets and purchase fewer liens with their capital. It really doesn't matter what investment bracket you choose as long as it has a good tax lien to bid to value ratio. You can also customize your investment bracket based on your strategies and also your capital. For example, let's say an investor wants to invest $10,000 into tax liens. They decide they'd like to set an investment bracket between $1,000 to $2,000 per lien. Well, with $10,000, they could purchase anywhere between 5 to 10 tax liens based on their custom bracket. And here's an example. This is Bob. This is just the example that we talked about. He has $10,000 he'd like to invest. Bob can choose to invest that $10,000 using one of the many investment brackets. He can purchase one tax lien for $10,000, 2 tax liens for $5,000, and just go down the list. 5 tax liens for $2,000, 10 tax liens for $1,000. And so with the investment bracket system, depending on what type of property you're looking to purchase or you're looking to invest into to earn your interest rate return, you can really divide that up between different brackets as long as the property has a good value to it. That's really what you're looking at. You're looking at that tax lien bid price, so that the amount that you're going to pay for the tax lien versus the value of the property. And if there's a good spread there, if it has a good bid to value ratio, then it's usually going to be a pretty good investment. So here are some tips. If you have limited time time, then choosing a higher bracket is going to save you time in transaction and research. So, for Bob, purchasing one tax lien for $10,000 versus 10 tax liens for $1,000 a piece is going to save him a lot of time as far as research and purchasing. Also, if you're interested in acquiring property, then spreading out your capital in lower bracket tax liens will increase your chances of a tax lien going to foreclosure. Or if the tax lien has a higher bid to value ratio, so maybe the tax lien is $10,000 but the property is only worth 60 or 70, but it's a good property, well, with that tax lien certificate, that might increase your chances as well. So it's good to look at all different avenues when investing in tax liens. Occasionally, a tax lien will be issued on a property for only a portion of the year's taxes. When this happens, a property owner will only pay part of the yearly taxes, so maybe they paid all but 1/4. This gives investors the chance to buy a tax lien with a very high bid to value ratio or very low bid to value ratio. Also, the minimum bid amount will not always be just 1 year's worth of taxes, especially if you're purchasing over the counter. Occasionally, a property was issued with tax liens in previous years that maybe weren't purchased at the auction. The county may include the other tax liens at the minimum bid amount. So that's something you're going to want to check on when you're researching over the counters. Also, if the property has an address, it may have building improvements. And with tools like Google Maps and Google Earth and Zillow, it's pretty easy to find if there's some type of structure on the property, and also determine what the value will be. So let's quickly talk about in the bracket system for bracketing tax deeds. For those investors that are looking to acquire property, there's really not a better way to do it than through tax deed investing. So as far as the brackets, in bracket number 1, these are going to be tax deeds that range anywhere between $100 to about $1,000. The property on against these $1,000 tax liens, 100 to 1,000, is going to range anywhere between 1,000 up to 20,000. This is where you're going to find your building lots, your mobile home lots, your vacation land. You may find a piece of vacant land. Really the key is just to make sure that the property has some value and that it also has the ability to be sold. I mean, even purchasing a tax lien for $1,000 is worth $10,000, you can still make a profit on that. You can turn around and sell that property for $7,000 or $8,000 and make a pretty good return. So even starting at the lower bracket, there is good opportunities out there. With investment bracket number 2, these are going to be tax liens that range anywhere between $1,000 to $2,500. The assessed value on these properties will range anywhere between $15 to $30. These are where you'll get your residential building lots, your commercial building lots, your mobile homes, your land. And sometimes you may get on the lower end price of structured properties in lower price markets. With investment bracket number 3, these are going to be tax deeds that range anywhere between $2,500 up to $5,000. You're going to see assessed values that range from 30 to 50. This is where you're going to start getting your single-family homes, your mobile homes with land, your nicer residential building lots, and you'll also start finding commercial property or commercial lots within this price range. With investment bracket number 4, these are going to be tax deeds that range anywhere between $5,000 to $10,000. They have an assessed value of anywhere between $50,000 to about $75,000. This is where you're going to find your nicer single-family homes, your condos, your residential building lots, also your commercial building lots. Really what we're doing is we're just looking at nicer or more expensive property as each one of these brackets goes up in value. Within bracket number 5, these are going to be tax deeds that range anywhere between $10,000 to $15,000. The assessed value on these properties will range from about $75,000 up to $150,000. This is where you're going to get into your condos, your commercial property, your large tracts of valuable land. You'll start getting into lower dollar multifamily homes, duplexes, triplexes, nicer single-family homes. So this is really that price range where you're going to start bidding on some of those single-family homes in a lot of markets. With investment bracket number 6, these are tax deeds that are $15,000 plus, and we can go from $15,000 up to literally millions of dollars depending on the property. So the assessed value on these properties can range from 150 up to millions of dollars. With these type of tax deeds, these are where you're going to find your single-family homes, your custom homes, your commercial buildings, your ranches, your farms, your expensive commercial lots, your apartment buildings, sixplexes. Any type of property that's valued over about 150, this is where it's going to usually start as far as the tax deed bidding. It may go a little bit higher than that, it may go lower than that. It just really depends on the market. But this at least gives you an idea of what you can look for as you start getting involved with tax deed investing. So as far as getting started with tax deeds, the opening bid is usually going to be a reflection of about 5 to 10% of the property's assessed value. The opening bid amount may not be the purchase price for the tax deeds sold at the auction. We purchased a couple tax deeds in Florida last month. The opening bid started at 5. We purchased it for 10, single family home. Another property started at 10,000. We purchased it for just over 20. Another single family home. So it just really depends on the type of property. The bidding is going to start at that minimum bid amount, and then it's going to bid up in price until the final bid has been established. Also, tax deeds can sell from the opening bid amount, and it can really go up depending on the competition at the auction. Usually, tax deeds are going to sell from anywhere about 20% to 50% of the market value. If there's real high competition and there's two investors that really want a property, then the bidding can go higher than there. But I recommend looking at tax deeds anywhere between that 20 to 50% of the market value. Also, tax deed properties can be purchased all over the country, and there's many states that have over-the-counter tax deeds available. With these over-the-counter tax deeds, they can be purchased for about 5 to 10% of their assessed value, so there is good opportunity with some of those type of properties. Well, that gives you the investment bracket system. If you have any questions, please go to our website, Secrets of Tax Lien Investing. We have auction list, over-the-counter list available. We have investor profiles and state profiles. We have the online auctions, home study courses. In fact, we have some real good ebooks that are available as well. We have some free ebooks, and we also have boot camps and webinars that are coming up as well that you can register for. So thank you for watching this video. Go ahead and subscribe. I'm going to be putting out several videos each week with different topics about tax lien and deed investing. Have a great day.